Hey traders, welcome to another episode of the Forex Market Analysis session. If you guys are new, my name is Alexander Nikitin. I'm a professional trader and a developer of MPS software. Alright, let us start then. The first pair that I'm going to analyze is Euro-Dollar. The time frame is 1 hour. We don't have anything on this. Let me switch to 4 hour. Nothing as well. Okay, Dollar-Yen 1 hour and 4 hour. Nothing. Pound dollar 1 hour, nothing, and 4 hour we have a unified godly. If you guys are new, the unified godly is a pattern that I use most. It is the pattern that unites the feature of a bad pattern and a godly pattern. I simply just united two because based on my backtesting, based on my market research, it has absolutely no sense in splitting these patterns into two. So basically I did the one step back and came to some original rules, to some to the pattern that was traded before Scott Carney invented the bad pattern and the godly pattern. Okay, so this is the way it looks like. Well, traditionally the pattern is invalidated when the X point is broken to the upside. So the structure of the pattern looks this way. We have a kind of impulse, then we have a zigzag correction, and it should not exceed this X point. This is a reversal zone, a resistance zone, whatever you call it. I give it a bit more space. I place my invalidation level at 113 Fibonacci inversion of this flag. So it is basically 13% more. If we measure this X to A leg as 100%, this is 13% above it, a kind of buffer. So the price have this zone for a reversal, and within this zone I will be looking at some reversal candlestick formations. We'll talk about those reversal candlesticks, bars, reversal bars or whatever a bit later. Right now keep in mind this 1.3429 level, 1.3430 level, even numbers are psychological numbers, they are good. 134.30, a potential sell. Okay, Euro Yen 1 hour, 4 hour, nothing. Aussie dollar, well, a potential unified godly, but it is very far from completion. 75.46. Well, it will take the whole day for it to complete, if ever it is going to complete. Nothing on 4 hour as well. Let's go pound yen, and nothing here. So it is very simple to do analysis, switch between the pairs, and the rest is done by the software. It is an MPS version. I'm running the swing identification algorithm that is called PREX. PREX means price extremes. So it is looking for highest high or lowest low within some predefined period of candles, and I specify the algorithm feature in settings. So simply go to MPS 5 properties, go to inputs, go to my algorithm, and here's my period. So actually I'm looking at the highest high or the lowest low within last 10 candles. So now you have a better understanding of how I draw my swings. And of course I can switch this to, for example, close price, and close price is a wonderful tool to identify trend. I found that this close price is not very good for pattern trading, but it is very, very good to identify trend because it pays no attention to intra candle movements. It pays no attention to some noise. Okay, let me show you. If I switch that into this, we don't need patterns anymore. As I told you, patterns are traded not good with close price because of these spikes always spiking through the zones. Well, at least if you don't set any stop limit orders and you will wait for a close price actually to close above or below your level, and well, it requires additional testing, and it requires additional market research. But what I found that it shows the overall direction. It simply filters all those highs and lows, all those noise on the chart, and you can see where is the major movement, where the price is heading to. So simple zigzag pattern of this kind. Let me show you. Simple zigzag pattern of this kind will indicate uptrend. So whenever you have it here, you can wait for a pullback to enter long, another pullback, enter long, another pullback, enter long, and so on and so forth until you have this. So until you have this sequence broken. And the same stuff with a downtrend, simple zigzag pullback, the one that was discovered by Charles Dow, was described by Charles Dow as a tendency, series of lower lows followed by low highs. So whenever you have this pattern, trending pattern, you have a more chance to continue rather than reverse. So when price goes to pull back, you can short it. Well, how can I do? Okay, in the end of the video I will show you a very nice pullback strategy, and it's not a strategy but it is an approach when combined with patterns. It is a very powerful tool when you can hit extended targets. So watch this video till the end to get this information. Okay, so whenever I switch to price extreme, now it shows me the close price, and the same with stochastic. So I set the settings of stochastic: overbought, oversold, period, smoothing, and other stuff. The same with RSI, and using this graphic interface I simply switch between my algorithms to see if my pattern is supported by some other algorithm. I truly believe that the pattern should stick out from the chart, and you should not be the only person who sees this pattern. So and if you are running one algorithm, the chances are that you are running something subjective that is seen only to you. That's why I added more and more algorithms, more algorithms that are most popular. So you simply set them, and you switch to see if other algorithms support the patterns that you are looking at. Okay, let me go to this, and let me switch this back. No, it's not. Highest high and lowest low. We can move to fractals as well. It is also a price extreme algorithm. You see how many patterns it says. The fractal is the Bill Williams indicator. Let me show you how the fractal looks like. It is this. So basically the fractal is formed whenever you have a high, and before that you have the two highs lower, and you have two highs lower as well. So it is something that is sticking, and it should be in the middle, two highs to the left, two highs to the right. Of course you can set a period of a fractal, three highs to the left, three highs to the right, but two highs to the left, two highs to the right is the most popular. That's why I added this variation here. Okay. It simply shows you, well, it will show you the majority of these patterns, how they called, consolidation patterns, whatever, wedges, those breakout patterns, triangles, whatever. So the fractals are very good in identifying this. They are not very good in identifying trends because they are spiking each other, making those false breakouts, but they are good in identifying these minor patterns for entries. Okay, this is the fractal. Now let's go and set everything back. High and low. my favorite one. Well, continue. That was dollar Canadian 1 hour, nothing on that, and New Zealand dollar 1 hour we have nothing, and 4 hour, after a bunch of these patterns, we have nothing as well. I treat this pattern as invalid. This is not a valid pattern, 70.0091, because the C to D leg movement is not straight. You see this? So for me it should be the movement like this, or like this, or like this to the upside. It should be straight. At least the indicator should tell me that it is straight. It can have some minor choppy movements inside, but it should be straight as told by my algorithm. Okay, another pattern is 76.31.8, pound Aussie 1 hour, 4 hour is nothing. Euro GBP, nothing here on 1 hour, 4 hour, also nothing. Euro Aussie, it is 54.75 completion of a unified godly. Until then nothing is there. And Aussie yen, nothing. Euro Canadian, nothing. GBP Canadian, a potential cipher at 71.33, so keep an eye if it goes here to complete the pattern on 4 hour GBP Canadian. Let's go New Zealand yen. The cipher completed, and I'm sure with this cipher already. Right now we have a kind of double top potential or whatever. It may blow this, or it may reverse and go lower. Well, doesn't matter. The cipher, I remember I was talking about this cipher in my yesterday video. And what is next? Euro New Zealand, nothing here. Canada yen, oh, well, Euro New Zealand 4 hour, also nothing. Canada yen 1 hour and 4 hour, a potential unified godly at 86.22. Aussie Canadian, a potential cipher at 96.59. 96.59, and Aussie New Zealand, it hit the first target. Also the trade that I was talking about yesterday and the day before that. You can see the same double top as we had on New Zealand yen, you see, and the trade 2 was hit, the stop loss was moved to break even, as we do this typically. It depends on where you entered, somewhere here for example, and now you closed half of your position, and when price went back to your entry, you should close the rest of your position having 0 of that. It should be risk-free opportunity. Well, nothing on 1 hour, and 4 hours says that we have a unified godly at 0.9215. Okay, that's it. As I promised guys to you, now I will show you a wonderful way of analyzing the market. It's not a ready-made strategy how you should trade it, but you can base a trading plan around this. As usual, do the back test and and simply calculate if it is working good with the way you're going to trade it. But the approach looks this way. It is the approach of Bryce Gelmer, the creator of a butterfly pattern. It is also an approach of a Larry Pesavento, the author of Trade What You See book, and some others. They say that Larry Pesavento was a teacher and a mentor of Scott Carney, but I didn't find any facts supporting that, but who knows? Who knows? Okay, so what is this approach? The approach is this: find one-to-one correction movements and one-to-one double drive movements. Let me show you what I mean. Okay, starting from Howard Gartley and I don't know, Elliott, Ralph Nelson Elliott, it is long way back to 1930s. So these two guys were describing the phenomena that if one leg of the market is of this size, most likely the second leg will be the same size. And it is true for correction. If one correction is of this size, most likely the second correction will be of this size, the same size. That's why it is called one-to-one correction or one-to-one impulse. Bryce Gilmer calls the one-to-one impulse a double drive, and one-to-one correction is a correction as well. So if you will be looking at one-to-one correction, you will have at least two reasons to enter at this point. For example, first of all, the structure point, previous broken support or resistance now should become support, and the second one is one-to-one measured movement. It is very powerful tool to this. There are other stuff what you should pay attention to, the Fibonacci relations of 53.2 and 618. They are most powerful corrections. Okay, so what Bryce Gilmer says, that when price is moving in consistent corrections, so one correction equals to another correction, and it is preferable that impulses were also moving good, but when corrections are most important, so when price moves in consistent corrections, then the trend is powerful. When price moves an inconsistent correction, something like this, small corrections, then again large correction, then again small correction, so chances are after this junk, yes, that we'll have that false breakout, and it will be a beginning of a new trend. So what we have right now, it is something here. So if we measure this correction, I use this channel tool, well, they are most likely equal, and but if we measure the previous ones, yes, this to this, they are smaller. If we go further here, we didn't have a large enough uptrend. Okay, so what it means that if compared to this movement, yes, this correction is doesn't hit the 382, yes. If we look at this one, if we measure this correction, this is 100% correction, yes. Then if we measure this one, this is barely hitting the 382. So this is what is called the inconsistent corrections. So they are different of the size related to impulse legs. So the impulse legs are the movements that install new highs here. So this movement to the upside is an impulse, this is a correction. And let me also check this stuff. Where these impulses equal. Then it should be this. Yep, they were almost equal. So this was the last thrust. Pay attention to this. Okay, and also when you have it this way, for example, this is a trend and this is a correction. So simply measure, the most important thing is to measure one-to-one correction movement, and then you simply stretch the fibs. If it comes to 50% retracement, then it is the most powerful level. 50%, 618. If it exceeds the 618, then the trend may be under question, maybe it is losing its power. It is still intact, but it may be losing its power. And also pay attention to this previous structure. So when these three come together, 50, 1-to-1 and previous structure, you have a powerful support. Also pay attention if the corrections are consistent within the trend or they are not consistent within the trend. And also pay attention at these minor movements here. So Larry Pesavento based his trade plan around this, for example, like this. When you have equal correction should terminate here, but here we have some movement, and it also consists of equal movements, and if they all terminate at one point, then you have a potential support level that gives you a very high probability setup. So all the patterns that we have right now, all these unified godlies or whatever, they are basically these patterns. Let me change the color to white. They are basically this pattern. This is the first movement, this is the correction, yes. So we have these patterns. Well, hope you understood this double drives. If we have a double drive to the upside like this, it will be a very good confirmation. 786 retracement, that is the completion of a unified godly plus this double drive plus back to double top, so it means double drive to double top. Very good situation when we have it this way. And plus the previous trend was broken this way, that I like. It didn't install very high impulse to the upside. It was not very strong impulse, it was kind of last thrust. It looks more like a false breakout, so you can see it this way. Well, that's it about the general approach of measuring the market. This is called the harmonic approach, when one movement relates to another movement. In the approach that I described, it relates as 1-to-1, yes, and there are other relations as 127, 1414, 1618, some sacred Fibonacci relations, but it doesn't matter. 1-to-1 is the most powerful one. It is actually what is called a harmonic movement, those ABCD patterns that are known right now. Scott Carney calls them ABCD patterns. 1-to-1, double drives, or whatever. Well, guys, if you are interested to learn more about my patterns, you are welcome to visit my website. It is this: www.ps-software.net, and on the front page you will see the demonstration videos of my monster pattern search, but click on the Learn the Patterns tab, and as soon as you click that, you will have the absolutely free tutorials on how to identify, how to execute, and how to manage the patterns, the trades basically that I use. Well, if you like this video and if you find it useful, you are welcome to hit that like button. By the way, the link is in description. If you want to have notification about my new videos, you are welcome to subscribe, and it will be nice if you share this video on social media, and leave your comments below if you like it. Until then, good luck and good trading. Hope to see you soon.